Hey, what is happening? Welcome back. Maxim Cruz here again. Today we are talking about cash proceeds from sale. As you already know, I got to do my disclosures. This is for information purposes only. If you want any advice, make sure you check out with your financial professionals. So, cash proceeds from sale. As a real estate broker and also as a real estate investor, I always need to know what my cash proceeds from sale are. A lot of times, I'm sure you've heard it, somebody's walking around bragging how they did a fix and flip and they made whatever $60,000, $100,000 from this stuff, but they're not telling you what their cash proceeds from sales are. Also, when we look at some of our investments and we analyze what our cash proceeds from sale are, there are things that we could do to start planning or start to maybe analyze our deals in different ways. So pretty much what the cash proceeds from sales is we have the final sale price. So let's say it's $1 million. The sales cost. All of these sales costs are what you're gonna pay, for example, your realtor to market the property. Closing expenses, attorneys involved, tax stamps that you gotta pay, deeds, preparation, all that sales cost that goes in there. We have tax planners that analyze this so deep that say, hey, consider even the cost that it takes for you to go. Let's say you live here in Miami and you own a property in Massachusetts. What are the costs involved for you to get on the plane to go and close that property, whatever it's going to be? Obviously, you can do it with a power of attorney. You could sign it electronically. There's multiple ways to close it. But if you have costs involved that you actually have to travel, what are those costs involved? Sometimes there are so many things that we're not looking into it and it's just crazy. Obviously, that might be a minimal number, but hey, I still got to put it in there. So it's all these costs that are available for you when you sold the property. Your mortgage balance. Obviously, if you are carrying a mortgage, you have to pay back the bank for them to transfer the title to somebody else. So let's say on this $1 million deal, you owed $500,000 to the bank. You're going to pay that off. You're going to pay, some of the expenses that we previously talked about. Then we have tax liability. And this is where a lot of things kind of get in the gray area. Obviously, for tax purposes, a lot of our investors, what they do is a 1031 exchange, and pretty much what that does is it defers their taxes and allows them to invest into a property of like kind, for example, real estate for real estate, in order for them to defer their tax liability to a further date. But obviously that's done on capital gains. So again, there might be some other tax liability that you have on a personal level, so make sure you check with your professionals to make sure that you account for that. So after you've paid all of these costs that are associated with that, this is where you have your sales proceeds after tax. So again, this is your true cash proceeds. And let's say, just for this example, let's say I sold something for $25. I paid the realtor $2. I paid off the mortgage for $3 or $2. And then I have a tax liability of $1. So that leaves me with 20. So out of 25, my cash that's left is this $20. So again, it's very simple math. It's not really complex. It's just things that you need to account for. And obviously, if you're an investor, you have a team that's doing this for you. You obviously should have an accountant or someone that's tracking your numbers, possibly a financial planner or some sort of financial advisor that is guiding you on how you carry this cost, whether you carry a mortgage, what tax liability, what are some of the things that you could do in order to reduce this, and make sure that you are working with a tax planner. I can't overemphasize this. Yes, I'm a little biased. My wife is a tax planner, but I have seen how this has saved individuals hundreds of thousands of dollars when they do this correctly. So tax planning is huge. So as always, let's just recap. The 16, what we call contributing elements, are kind of the things that you consider. So obviously the cash proceeds from the sale, you obviously need to know the location. Obviously you've accounted for income, appreciation, expenses, the price, the leverage, the financing term. So obviously all of these things at this point when you're closing out the sale, you can say, okay, my cash proceeds, I now understand all 16 of those items. Now, how does that affect you as an investor or someone that's looking to get into real estate investment? This right here, along with this right here, what it gives you is something that no one can take away from you, and that's experience. If you have a property that you bought, let's say for $1 million, or I'll give you an example on a property we own. For example, back in 2011, we bought a property for $250,000. As of today, it's appreciated in value, which we accounted for. It's good location, good size. The income on it is decent. The expenses on it are fairly low. We bought it in 2011, so the price was fairly inexpensive. We used the bank for leverage. We had financing term up to 30 years. Financing principal reduction, I didn't know what that was back then, but now that I do, every year we're paying down that loan, so we know what that is. We obviously have tax benefits. The tax bracket on some of the personal stuff that is included, my wife accounts for that, so if you want more information, I'll give you her contact information. You could see that. Rent increases, obviously we factored that in, because when we bought the property, there were some units that were renting for $500, and now they're all the way up to $850 with a possible rent increase this year, so that's factored into. Other tax incentives, this wasn't one of those properties that, you know, we got some subsidized government energy or solar panel program or something like that, so that wasn't a considered reinvestment of cash flow. Obviously, some of the cash flow that has come in, we've put it back into the property, so we've made some improvements on it in order to collect those higher rents. Closing costs, obviously we had closing costs when we bought the property, and when we sell, we know we're going to have some closing costs as well. Capital gains tax, obviously at this point, I know I have some capital gains tax if I was to sell the property, so I know that what I would have to do there. And risk, obviously we considered the risk that it took there. If I was to sell that property today, I would know after running this formula and this sales proceeds after tax, I would know, hey, if I was to do the same exact deal, obviously we're in a new year, we're in a different economy, there are different things to consider here. Well, not different things to consider. It's just, for example, the appreciation, when at that time it might have been 10% annually, now it's probably around a 6.5% annually. So again, there are places that appreciation is much higher versus in some areas it's much lower. For example, you have whole factories that have been shut down. Those properties, because those people have lost their jobs because they've moved out of there, instead of being on an increase because people are moving there for jobs or the school system or whatever the scenario might be, now all of a sudden, you know, it's on a decline, so they're actually depreciating. So it's very important for you to know those things. Again, if you haven't watched my other video on the 16 contributing elements, make sure you check it out. I go deep into each one of this. But going back to this is, what I know from this is, if I was to sell that property today, that will give me the experience of saying, okay, I know with probably 99% certainty that if I repeat what I did in 2011 and I apply all of this stuff and I invest now into a property, the proceeds, let's say is $200,000 that now I'm going to invest. My final cash proceeds, if my investment strategy is to cash out on year 5 and sell, or to do that, if I've considered all of this stuff, and obviously if the economy hasn't changed, if I have all this stuff factored in, most likely, based on my experience, this is what we are looking for, sales proceeds after tax. Obviously, you know, as an investor, you invest for cash flow, but your criteria might be different. I know people that have a lot of tax liability. So what do? They might invest in some property that might not be cash flowing, but they are in a very high appreciating area. So because they have that tax liability now, they will invest into that property in order to reduce that tax liability, get the appreciation, and then maybe at year 5 or year 6 when they sell, sure, maybe they didn't make a lot of rent increases, or they didn't have a lot of income while they had that. But hey, if you reduce your tax liability now, and let's say instead of you giving it to the IRS, let's say you had a $500,000 tax liability, and you invested into something that was appreciating, wouldn't you want to defer your tax liability, take that $500,000, invest it into something appreciated where in the future, let's say you sold it for $650. Worst case scenario, you sold it for $650. You appreciate $150,000, but now what you have is you've deferred that tax liability. Maybe you have other strategies that you can actually get income from that property you're investing in, and then you could defer that. Again, there's just so much things to consider, and obviously you see I'm passionate about talking on this stuff. But again, the cash proceeds from sale, my biggest takeaway is that experience that you get from it. Obviously, all of us want to make a profit. We go into a deal, you know, thinking for the best, planning for the worst, and we're looking for proceeds after tax, after the sale of a property. So just make sure you know and make sure your accountant is checking these numbers. There's plenty of times where the sales cost, you'll see, you know, an inspection, or you'll see something in there that doesn't look right, and you're like, hey, let me double check, because hey, if I'm selling this property for $1 million and my cost as the seller is whatever, $200,000-300,000, let me double check on this sales cost. Maybe that contractor added a zero somewhere, or maybe that attorney calculated something wrong, or something's going on, or maybe the mortgage balance was incorrect, maybe the final water bill that came in wasn't correctly reading on a property, or maybe that tax liability, maybe you had additional savings that you could save. So again, just consider some of these stuff. Make sure you check out with your local professionals or someone who knows more about investing, that is keeping track of all these numbers. If you have any specific questions that you would like for me to answer, any information that I can provide for you, please let me know. Otherwise, have an awesome day.